Welcome to Tradespoon and Yellow Tunnel. My name is Vlad Karpel. I'm CEO and founder of both companies, and today we're going to have a live trading room open to trade stock and options using our technology. Before we begin, let me know if you guys can hear me and see my screen. We begin shortly after. Fred, Richard, good morning. Faust, Michael, Bill. Yeah, Bill. I mean, when the company, I'll talk about yellow, right? When there is a lot of volatility in the stock, models can't really predict, right? It's driven by, social media. It's driven by the news. Model can predict. No model can predict the outcome of these kind of black swan events, right? So they can show you pressure points, but they can change very quickly based on the news, right? Model is great when you have certain patterns, and it's very hard to manipulate. Whether it's like QQQ or spiders, right? Very hard to any news to push markets out of to push the volatility, right? So it's all dependent on volatility. Models train and learn in certain volatility range. And when that volatility range moves for whatever reason, model has to relearn and adjust, right? And usually these are the news, right? And some stocks like yellow or biopharmaceutical, they're driven by news every day almost, right? But S&P 500 stocks or QQQ stocks, it's hard to manipulate them, right? Not manipulate, but it's hard to affect them by the news that will spike the volatility, right? So when VIX is in a certain range, underlying volatility in certain range, model is doing a good job determining the pressure points. But if volatility, let's say VIX jumps tomorrow on CPI number from 15 to 24, well, model will have to adjust that, right? So, and that same thing with individual stock, like earnings, right? Model can predict the outcome of the earnings. Right? And it can show you support and resistance going into the earnings, but if it's gonna be a big surprise to the upside or downside, it won't predict it. Loud and clear, Martin. Desi, welcome back. Bill, yes, we'll discuss it further. Let's start. Live trading room open to trade stock and options using our technology. For those of you who are new, welcome. If this is your first live event, do me a favor, type in first. Always want to welcome new subscribers. Disclosures, I want to say thank you to everybody. Because of you, I'm able to do what I enjoy professionally, managing and trading my own money. I've been doing it for over 15 years, mentoring and teaching subscribers how to trade stock and options. And my background is technology, software, and artificial intelligence. Disclosures are very important. Please read them. If you're new to trading stock or options, I encourage you to visit optionsclearing.com, the link on your screen, so you can understand the risk associated with trading stock and options. I'm not a financial advisor. I'm here to show you what I do in my own account based on my own risk tolerance level for general education information purposes only. It should not be assumed that the future trade picks will be profitable or equal past performance. All right. Again, just to reiterate, we have few people that are new. So psychology is very important. Trading psychology is extremely important, especially when the market is volatile and when there is no clear direction, right? I mean, we've been arguing for the past 2 years whether we're trading in the bull market or in the bear market, right? And sometimes bears are in control, sometimes bulls are in control. And it could be, bulls have been in control since October, right? So you don't really know at any given point which market we're trading in. You can have an opinion we're in the bull market, you can have an opinion we're trading in the bear market or sideways market. So for that reason, very important to have well-defined process, right? And concentrating on the process first and then on the outcome, right? What is the process? Trading as a business. Make sure that all of your rules are documented that you're trading. Maintain a journal of all your trades, writing down your thoughts, your emotions, reasons why you're getting into a trade, and then grade yourself, right? For every trade, I grade myself. If I follow my trading plan, I give myself A and B. Based on the outcome, if I deviate, I give myself C and D. I think this is extremely important. So you have point of reference. You can always go back to previous month's CPI data. What was your thoughts? What were your actions? What were the results? And so you can continue learning. Otherwise, I don't really remember months ago what was the CPI print and how did it affect my portfolio. But I can go back and look, at the trades. Same earnings, right? We did Lyft earnings or Rivian earnings yesterday. So same thing. I don't remember Lyft or Rivian earnings from last quarter. I can't really know exactly details of what I did, what was the trade, but I can go back to my journal and reference, right, and remind myself. So it's very important to go through successful trades, unsuccessful trades. So journaling is extremely important. Usually my grade, I don't get A or B is because there's two things that I break. One is the number of positions. Sometimes I have too many positions, or two position size, right? My rule is 2.5%. I get caught up, or I go on lunch, and instead of 2.5%, it's 4.5%, right? So risk management is foundation of trading psychology and being successful trading, being disciplined trader. It helps you if you journal and write these rules down. In terms of position size, 4 positions if you're new to trading, right? If you just start trading, I would say 4 positions, or if you're still not confident in your trades, let's look at spiders, right? So in terms of support and resistance levels for spiders, well, nothing has changed, right? We had a pretty impressive rebound yesterday, despite the downgrade of some of the banks, despite of headlines that China is in stagflation and lost decade and stuff like that. Market has recovered, right? So bulls are still in control and people are buying on the dips. So main support, beginning of July, bulls were not able to break through this level in beginning of July. So it's almost been months and a half, right, where we traded higher, much higher, and now we're kind of giving up some of these gains. I do look at the model, stock forecast toolbox. Question was, how accurate is the model, right, for stocks like Yellow that's going through bankruptcy? Stocks that go through bankruptcy, it's not accurate, right? Because today they're going through bankruptcy, tomorrow they're getting bailed out. Model doesn't know when the stock is going to get bailed out or will actually declare bankruptcy. Similar with earnings, right? So today Lyft had earnings, right? It was up pre-market 10%, right? And then it's turned negative, down 7%. So it's going to open at 1074. Model is actually doing a good job predicting 1071. So it's not completely, useless, right? It's still useful information with the idea that there is really no big surprise to the upside or to the downside. So it's actually doing a good job saying that 1090 that is getting to these oversold levels. But again, since this is earnings, it could quickly break through the 1050. Let's look at Upstart. I think that had 18% move to the downside. So Upstart is trading at pre-market 42, right? So it's $7 off, right? So one might say, oh my God, this is completely unreliable. Maybe, right? Maybe you can say that, but it does show you that going into the earnings negative trend, so that's good. So model is doing a good job showing that it's negative trend. 49 is now what used to be a support is becoming an overhead resistance, right? And they missed the earnings by a lot, so it's a new information. Model has to be trained on this data, right? It wasn't available yesterday or 20 days ago. So sometimes, so the point is that if there is no big surprise to the upside, to the downside, model can predict the range. But if there is an event, whatever it is, whether it's a bankruptcy of Yellow or whether it's Upstart missed the earnings, model will have to adjust. But if there is no, if Microsoft doesn't have earnings and usually a single event doesn't create a big spike in volatility. You know, it does show you negative trend in Microsoft. It shows you at 319, you probably want to consider going long if you're still bullish on Microsoft, or at 326 at the current level, maybe it makes sense to reduce your position. So it's very reliable, right? So it's all about volatility, underlying volatility of the asset class or individual stocks. If that volatility jumps significantly out of range, then the model will have to adjust. It's a very important discussion. I would say 444 is your line in the sand for day trading. If you're short-term trading, this is your support, right? So this is your support number one. This is beginning of July. This is a medium-term support. This is a short-term overhead resistance, right? From last week, we tried to close this gap, couldn't do it. So I would watch that level, especially tomorrow as we're approaching CPI data. We know tomorrow we're either going to jump to 454, right, on better than expected CPI, or we're going to roll over and retest 444, right? Those are the two outcomes. And then next is this channel from October, right? From October, this ascending channel, very well defined. It also corresponds to 50-day moving average, right? That will be your support number 2. So if you're buying the market, let's say you're bullish, right? You say, okay, market pulled back a few percentage points, that makes sense. Day trading, I would say 444 is your stop level. Model agrees, right? Let's see, let's look at the model. 443. So model, I agree with the model. 443 is your main support. Day trading, 450 is your overhead resistance. Even if you're building position beyond today, 443 is where I would enter the trade. 450 exit for day trading or longer term trading. If it's a longer term trading, you don't want to buy at 450 because you're probably overpaying. At 443 is a fair price, right? And it's a pretty big range, right? It's 7 points. It's almost 1.5–2% difference. So if you can save 0.5% on your entry and 0.5% exit by forcing yourself to be a little bit more patient, right? Then it can make a huge difference over a long period of time. So I encourage you to use this tool. And do keep an eye on volatility, right? Tomorrow, when we have CPI print, we could easily break these levels because it's a new information. Everybody is waiting. It's going to impact treasuries. It's going to impact currencies. And if it's a big surprise to the upside or to the downside, that will move the market beyond that range. But today, we don't have those news. So I would be surprised if we break below 443, right? And I would be surprised if we break above 450. All right. Any questions? John, thank you. Thank you, John. John is back. Very good. Thank you, John. The model, yeah, the model doesn't, model is not true. So very important, right? This whole theme right now, right? Since nobody talked about AI before, now everybody talks about this. Why are some companies going to be winners in AI and some companies will not? It all depends on the data that you are training the model on, right? If you give the model a good data, right, then it will give good predictions. Doesn't matter what you train it on. It could be stock prices, it could be medical records, right, or it could be legal documents, right? Garbage in, garbage out. But if you have good data, proprietary data, AI network, there's a lot of AI is open source. So you can find a lot of models. You don't even have to pay for them, right? So it's all dependent on the data, right? So if you have good data, you can train the model on the good data. It will give you good prediction. If you're trying to train the model on black swan events or on how people react to CPI data, well, there's not a lot of data points. Plus, just because CPI is up, that doesn't mean market is going to go up, right? It's really very hard to train that, right? So something to just keep in mind in overall kind of understanding of models and how software works, right? Software, these models, everybody have the same models, right? There's Google models, I don't know, ChatGPT stuff. So you can find them, they're all open source and you can, for free download it, not download it, but use the API. But now you have to feed the data. So we're feeding the data, and in this model, we're feeding the data that's here. It's the open price, close price, low, high for each of the day. We're training on the volume. We train on earnings, but that's it, right? We don't train on Powell's, mood or, how much sleep Powell had that day, right? Which is a very important factor, but very hard to, predict. That's it, TLT. So it is all about, tomorrow, right? Today we need to prepare for tomorrow, because tomorrow is the core CPI, and we still have this discussion for 2 years. What's more important? Is this the recession or is this the inflation? 10-year yield had a significant rally in the last couple of weeks, right? We've retested October highs and now slowly pulling back, right? And TLT is the mirror image of 30-year, 10-year, right, yield curve. So TLT did break. So from technical perspective, it's pretty bearish, right? It broke through the 99 level and it's retesting October lows, right? The only way TLT will go down from my perspective is core CPI, right? Or some people pay attention to headlines, some people core, whatever. But if the CPI comes back and worse, right? And the argument for that was that year-over-year comparison is going to get difficult, right? Because 5 months ago when we were, CPI was at 9%, so every year-over-year comparison was 9% is very much easier. CPI has been trending down. I think it started like maybe September, October of last year, kind of where the market bottomed. So those comparisons could be difficult. So potentially we could have a jump, right? Plus the oil prices, right? Everybody's paying attention to oil prices, right? We do have crude oil is trying to break out of this range and it's posting year-to-date high. So that also contributes to inflation, shelter prices are still high. So if the trend reverses, instead of trending down, we see a big jump in core CPI, then yes, interest rates are going to go higher, potentially breaking through this level, and TLT will continue to drop and at least retest, 91 level. Whether this will happen tomorrow or not, I honestly don't know, right? But I don't think that's the case, right? Right now, there's no signs that inflation is coming back higher. If anything, the headline news is deflation, right? If you look at the China, where's the Wall Street Journal? Was reading. So here, right? Headline news in Wall Street Journal is China slips into deflation, warning signs of global economy, right? So, that's the headline news, right? And this is the second biggest consumer of oil and, imports, exports, and it's significantly has, China looks like in trouble from economy, right? Now on Twitter is like, they comparison to Japan, next 10 years of lost decade. I mean, so my opinion that inflation is under control, right? As long as the Fed continues to tighten market conditions and raise interest rates, inflation is probably not going to come back. China is also, looks like in deflation. So is Europe. Europe is, I think barely has positive GDP. So I don't think that would be the case. I think yields are extremely oversold. They will, overbought. They will continue to drop and TLT will rebound. Especially if we do have distrust in the banking system, right? Yesterday's headline news was downgrade of Moody's down, or is it here? Fitch downgrade, right? First was Fitch downgrade of US debt, now Moody's downgrade of banks, right? Bank problems aren't over according to the bond market, right? So if that's true, right? If that's true that bank problems aren't over, right? And at some point we're going to have more mergers and acquisitions or potentially distressed or liquidity issues in the banking system, then TLT will go high, right? Because usually I bought TLT as a hedge, right? As a hedge because If we do have liquidity issues or any kind of distress, then you do have big jump in TLT like we did in March, right? In March, when we had liquidity issues in the market, then that's where we jumped to 108 level. So Desi, thank you for that question. Ricardo, thank you. Okay, did I miss any questions? Ricardo, welcome back. Okay, so, sorry, I forgot about my earnings. Okay, so we did some earnings yesterday, right? Upstart down 24%. We did, I believe, Lyft. Let's just make sure. I mean, I did a few others. Some of you guys at the closing bell did a few others, but the main one was Lyft, right? I did it a little bit different. I sold the call spread because I think the risk is to the downside, right? I'm bearish in the markets. I think a lot of these companies do have a risk to the downside, and bought a put, right? To finance, because I thought Lyft is going to have pretty bad earnings. So it doesn't look like it's very bad. It looks like it's manageable. So now put, let's look at the prices of put and the prices of call, right? So selling call spread, receiving premium, turning around and using fraction of that premium to buy a put if there is a big surprise to the downside. Okay, so let's see, Lyft. All right, so let's put in order to okay, so Lyft, let me just put this, I'm putting in order to close. Give me 1 second. All right, so Lyft, so the call I can close, that basically lost all, to free up buying power. That's one of the reasons. Okay, so half of the positions Schlumberger got closed, right? We have crude oil is at year-to-date high. So Schlumberger, half of the position I'm out on SLB. A lot of people ask about that question. Still have an open order to close the second half of the position. And I did close the lift calls. So now I have to manage the puts, the long put, right? The long put, because I think it could continue going lower. Long put lost most of its value. So I'm going to try, I mean, potentially tomorrow. The good news is that the put, I decided to give myself a little bit more time, and it expires next week, right? August 18th. So I have time. Plus, if CPI is worse than expected, and we do have sell-off continues, then we could get potentially, maybe not to that level, but well, you know, we could have higher values. I'm going to try to put maybe 20 cents. Try to close it for 20 cents. Now it's almost worthless. It's 2 to 3 cents, right? Because it didn't drop that much, right? Lift. So I have to monitor the lift put. Any questions on lift or Schlumberger? Richard, do I ever consider Greek's particular delta? Yes, delta is a proxy for probability, right? Delta 20, you know, or 0.2, that's roughly 20% probability. So I do look at the delta, right? Here is an example of out-of-the-money puts, out-of-the-money calls, right? Their delta is 10, delta 0.1, 2. Basically, 10, very small probability that lift will get to 8.5, very small probability to get 15.5. 10% of the time, 5% of the time. That's why these trades, 9 out of 10 times, they're successful. 1 out of 10 times, you do have stock like Upstart, which does move, 25% lower. So if you sold puts, you could be in trouble, right? So, and then you have to manage the position, right? You have to manage the position. Let me know if you guys have any questions. Meanwhile, let's see. So it's all about Apple, right? We talked about Apple, right? Where Apple is going to go, where the market is going to go. So far, mute rebound, right? We're actually retesting the lower Bollinger Bear, but oversold, extremely oversold, right? Extremely oversold. A lot of bulls are at least thinking about buying Apple. Maybe they're not buying Apple, but after CPI, I wouldn't be surprised we get close to 50-day moving average, right? Big jump to the upside. If CPI is better than expected, right? If CPI is better than expected. LA Lilly is in the news, right? We've had this stock before, but earnings, and this is like the best drug in the history of all the drugs. Weight loss. Everybody's waiting for approval from Medicare and health insurances, but millions of people are taking it, right? So this is a good long-term investment. It's not a one-way trade. It doesn't, doesn't move in one direction, but it could. Blink, right? Charging stations, so electrical vehicles. Rivian is slightly negative, right? Similar to Lucid. Blink pull back. So it is a good stock It's also like for long-term investment. Okay, let's see. One second. All right. The lift is down, Upstart down, Rivian down 3%, Twilio is up 5%, Blink is up 11%, CPNG is up 8%. So they're all kind of the way we predicted yesterday, right? The risk to the downside, Rivian did both puts and calls, but it's always in the range of trading. Carmen, good morning. Pay them back after earnings. It seems to be this. Yeah. Carmen, I mean, it's hard to predict. I mean, based on the earnings results, yes, institutions. The question was, do institutions buy or sell after the earnings? Depends on the earnings, right? I'm sure LA Lilly institutions are buying, right? Big flows into this drug. Blink maybe. I mean, I don't know about institutions. Let's see, is there a big one? It's a small volume, so I don't think so. But Rivian is a popular stock, right? So, it's trading millions of shares, right? So institution might be considering, electrical vehicles, and if it dropped and they think the reaction is overdone, then they would buy. But I don't think there's a pattern, just kind of buy before, sell after. Have earnings tomorrow. Okay, thank you, Carmen. All right, let's look at what else is going on in the market. So Spiders is slightly lower, right? It's trying to close the gap. For now, unsuccessful, right? Tried to close the morning gap. Almost closed it. And now rolling over, right? And QQQ following the suit, similar price action. Okay, and let's see what else is interesting. VIX pulled back. So energy, one of the beneficiaries, energy, we've seen Schlumberger, right? It's making all-time high. Looks like it does want to break out of this range. So I would watch. So 2023 high. So it's second attempt to basically, 5-year high, right? It's approaching 5-year high. And it's trying to break through the year-to-date high, Schlumberger. So it's up 2%. Eli Lilly up, CVS is up. Everything else, slightly values, slightly positive, Spiders slightly negative. Semis are down 1%. QQQ is continue to underperform. Yeah, so I would look at the Microsoft, right? Microsoft makes new lows, right? That's bearish. It's kind of sitting on this make or break scenario below 50-day moving average. Very bearish price pattern. Not much support below this line. So I would look at Microsoft. I would look at Tesla, right? Sitting on support, and Apple. Very similar price pattern. These are the trillion-dollar companies that are, gonna push the market higher or lower. Google is still strong. Meta, very strong. Google Meta is still very strong. Netflix, I think, is down, sitting at the 50-day moving average. All right, the rest of the positions. So we talked about Lyft, Schlumberger, QQQ as a idea to hedge the portfolio. So I did close QQQ partially, yesterday. So I did close QQQ sitting at the 50-day moving average, right? It's kind of make or break scenario. We haven't had, QQQ sitting at the 50-day moving average since March, right? Last time it pierced through March, it successfully recovered. Same thing in December, right? So it's been a good support, right? So it makes sense to trim, right? Because there is a rebound. 7% of the 7 out of 10 times 50-day moving average holds, right? And you do have a rebound. A lot of it will depend on CPI data and the perception. So I did trim QQQ, short QQQ, and put the order to close. But if it doesn't hold, the 30% it doesn't hold, then you're gonna have a pretty quick drop, just like Apple, probably to lower Bollinger Band, right? That's 2 standard deviation move. So next level is 360, 350, right? I think you can quickly get to 360 level and then 350 level, and at that point probably want to close that short QQQ position. So that's my thought process on QQQ. XLE is doing well. Yes. So it looks like rotations is into energy, right? It looks like it's breaking out. So XLE continues to go higher. That's one of our long position. Consumer staples, weaker, but still positive uptrend, right? It's still kind of, as long as it's in this trend line, I'm not worried too much, right? 50-day moving average, 200-day moving average, higher highs, higher lows. I think at some point you will see safety asset classes like consumer staples and healthcare to outperform, right? And healthcare almost at year-to-date high, right? So rotation into safety asset classes that pay you dividends and will outperform, AI stocks like how's Palantir doing. Palantir is sitting at the 50-day moving average. Big pullback in some of the AI stocks. And how's NVIDIA? Sitting on the 50-day moving average, just similar price pattern. Okay, to other technology stocks. Okay, so consumer staples, CLX. I'm bullish on CLX, right? I'm bullish on CLX. I'm bullish on CVS, right? They both pull back, but you can buy either options on ETFs, right? Like I have XLP, I have XLE bullish positions, right, on some of the ETFs. Or if you prefer to pick individual stock, it is a stock picking market, right? Not all stocks going higher, not all stocks going lower right now. So, okay, I think CVS and CLX, they pay you dividend. They had very good earnings. They have pulled back slightly, but I think these are good, maybe medium-term trades. Still bearish on IWM, right? It's kind of, it's a March position, it's August position, and we are sitting on this with retesting 190 line, right? 190. I think tomorrow there will, we're either going to break through this line, right, or we get back to 195, 196 level. So I think the safest, if you have more than one contract, is to, or even two contracts, right, to close the August position. And if you're still bearish on the market and you think the 50-day moving average on technology is not going to hold, and we already broke through these uptrends, then I would roll it into September, October. We have a lot of September positions, so maybe October, right? Maybe roll it into October, right? So that would be my thought process on IWM, and I mean XLF. They're all kind of have the same price pattern. XLF, I have also August and September position. It's kind of rolling over, but still sitting on the support, right? I would. Looks like this is your line in the sand for banks. We've been here before. So that's your support, not that far from 200-day moving average. And carry. Here is September, so a little bit more time. We had the downgrade, kind of sharp pullback yesterday. So again, this is the line in the sand for. This is the line in the sand for the regional banks, right? Yesterday's low, 46.5. I think it's just, again, a matter of time to break through this level. Whether it's carry September, I think we have more time. So I'm less concerned about carry than I am about IWM and XLF because the time is ticking. Talked about lift. We talked about QQQ. So September QQQ puts 345. I think we'll do fine. 280 and 290. I'm planning to close if we do have kind of a spike in volatility. And I did start a new position in October, all bearish. If you're uncomfortable trading options, one way to hedge is SH. Right? I would consider hedging using SH. Schlumberger still have half of the position left. Looks like it's breaking out to the upside, right? I mean, 2% gain, right? Trying to squeeze maybe another 2% gain out of Schlumberger. We talked about TLT, right? I'm still long TLT. That could be one of the hedge. XLE continues to go higher. Let's see, maybe we can put in order. So we need to figure out XLE. So it's up 420, 35 cents. So it's up 10%. So maybe another 30. So maybe $5 spread. So maybe 450, 440. 440. So, and you can see this is a good example that stock can reach your level, but option spreads, they move slower, right? It has a benefit because they do move slower, right? But and you have well-defined risk reward profile. But Schlumberger, I'm out on XLE, not yet, right? So that's kind of a good example. So we'll put in order. All right. So that's XLF, XRE. Let's see what else. I don't know if you guys have any questions. Okay, any other question? What is EBITDA? EBITDA is just one of the ways companies, it's accounting term, right? Earnings before income and taxes, depreciation and amortization, right? So some people look at the cash flow, some people look at the earnings per share. A lot of companies are judged by EBITDA, right? Especially the startups, right? They like to use EBITDA because they're writing off a lot of the money on investments, amortization, so they prefer EBITDA term. But this is just an accounting term. You have to be careful about EBITDA because a lot of companies do these accounting tricks by writing off a lot of the investments. And EBITDA looks positive, but they have either huge debt or they have cash flow issues. So you got to look at both. John, any earnings plays? Earnings, you have to be careful, right? So I would definitely downsize your position because, again, tomorrow we have CPI data and volatility can jump. But, most notable is Disney, right? Disney announced earnings. So I'm going to analyze the risk, the premium, but Disney is in the news, right? Its chart does not look great, right? It's sitting at multi-year lows. So Disney, I think Wynn Resort is another one. But there are a couple earnings play. T or Verizon. So buy and hold in my 401k, I did start AT&T, right? I think the worst news are over, right? I mean, they are very sensitive to interest rates, right? So if interest rates continue to jump and, but for longer term investment, I think the worst is over. It does pay 7%, right? It's better than money market funds of 5%. So I think long term AT&T, it makes sense to hold, especially with all the sell-offs, because it is sitting at the, you have to go back to 2008. It's below 2008 level. So, obviously they're having issues with this lead cables, which doesn't seem like, small percentage of all of the cables that they have out there. But, I do have a small position in AT&T. I think long term, it doesn't mean it's not going lower, right? But, if it drops to 13.12, I would add more, right? I just broke it down. I didn't put the entire position. I'm just slowly accumulating. And after earnings, it seemed like it had decent earnings, right? So I think the worst is probably behind AT&T. I'm still put on carry, yes, John. Thank you, John. Wynn, yes. So Wynn is, Wynn Resort announcing earnings. All of these leisure stocks also been under pressure, right? Wynn Resort, I think MGM, I think, too far too fast, right? They're all pulling back, right? Expedia. So looks like this, even though Expedia recovered most of the losses, Booking. So it looks like, booking is actually at all-time high. So it looks like the reopening after COVID reopening, people traveling, it looks like it's maybe reaching its highest point, right? Because you do see airlines below 50-day moving average, even Carnival cruises, right? Significantly pulled back, sitting at 50-day moving average. But I think that trade is probably over. So I'm long XLE, put in order to close XLE, higher price, and then bearish on XLF. We talked about XLF, and still bullish on XLP. Still bullish on XLP. Looks like it's going through consolidation. It's sitting on this key support, and at least for now, this downtrend, this uptrend is intact. All right. Meanwhile, QQQ is down 40 basis points, close to yesterday's session low. Any questions? John, congratulations. Happy birthday to your dad. That's impressive. Thank you, John. See you tomorrow. Thank you. Thank you. All right. It's 9:12. Any other questions? Meanwhile, so I would prepare for tomorrow, right? If you're new to trading, I would propose, market could be up 2% tomorrow, market could be down 2% tomorrow. Very hard to predict, right? It is oversold, so it should rally. But on the other hand, we do have a lot of stocks kind of breaking through their uptrends, like Apple and Microsoft. So you could have a surprise to the downside also. So if you're not sure when to enter position, when to exit position, you're still learning, you're still building your trading plan, I would have 4 positions, 2 bullish, 2 bearish. I went over some of the options examples. I went over some of the stock examples. But this is the time to rebalance, right? And the way I usually do it, I look at the chart, right? And I'm, how would I feel if QQQ is at 383, right? Kind of envision this, right? Just like I do with earnings, right? With Lyft, I said, envision Lyft is up 20%, right? And it's approaching your strike price. What do? You buy a stock and you prepare. Just like you prepare for the earnings announcements and uncertainty, right? You don't know if Lyft is going to be, Lyft was up 10% after market, now it dropped 10%. Where is it now? 6% down. So you just don't know, right? So that's kind of the idea, right? You want to make sure that you prepare for both events. All right. So same thing with QQQ, right? How would you feel if tomorrow we are at 2%, 3% up, right? Could be 10 points, 380, right? I mean, maybe you try to close, at least approach this gap. Try to close this gap and get back above the trend line. So we could be at 380, or we break through the 50-day moving average and we're at 360, right? Both events are possible, right? So that's when I encourage you to maybe have 2 bullish positions, 2 bearish positions. On bearish positions, you'll make money. On bullish position, you'll have to decide whether to close them or trim them. But you know that your drawdown is not going to be 10%, right? If you allocate in 2.5% of your account value per position, right? You want to avoid these large drawdowns. The only way to avoid it is, have 4 positions, some bullish, some bearish. Whether you're a stock trader or an option trader, I went over those examples. All right. Any other questions? Vamsidar, SMCI, I think they had earnings, right? Super Microchip. I mean, this is the story of all the AI stocks, right? There will be winners and there will be losers, right? When you have elevator up and you have a disappointing earnings where you're not justifying, that you triple in price since May, right? Then you have elevator down, right? Next one, the biggest one is NVIDIA, right? A lot of people already say this. It's all about NVIDIA now in 2 weeks. NVIDIA has to deliver, there's so much hype about NVIDIA that how many orders they have that they have to guide higher, right? Last time they said revenue is going to be higher from 7 to 11%. They have to go from 11 to 20%, because if they just meet the guidelines of whatever the guidelines, 11 to 8%, and then you can have this kind of reaction. Right. I don't know what NVIDIA is going to do. I do know that this looks like elevator up, elevator down, right? And I didn't follow the earnings exactly, but this is not a healthy price pattern, right? So and same thing. Pelletier was a perfect example where, they guided up and their positive cash flow, everything is great. I don't think there was anything wrong with Pelletier earnings, but the stock is down, whatever, 20%, right? From 20 to 16, right? Microsoft, same thing. When you have elevator up, you have to have earnings elevator up too, right? To justify the move. If you don't, then the stock is in trouble, right? So Pelletier is at 50-day moving average. It's probably going to 13, right? If I have to guess. If QQQ breaks through the 50-day moving average, and Pelletier breaks through the 50-day moving average, and Microsoft and Apple stays below 50-day moving average, they're all moving to 2 standard deviation moves, right, in the near future. So I would stay away from, personally, I'm staying away from these AI stocks. I think, kind of that's trading, right? This is trading. Invest in NVIDIA. I mean, NVIDIA is a superstar, right? Everybody wants to use their chips. So I assume they're going to continue going higher. So long term, I think it's a good investment, but that doesn't mean it cannot be at 378. It doesn't mean it's not going to be at 300, right? Both outcomes are possible. So if you buy at 50-day moving average, you have to be prepared to buy at 200-day moving average, right? If you're going to sell your position at 200-day moving average, then don't buy it, right? So I would say, if NVIDIA closes this earnings gap at 300, you have to be able, you shouldn't be down more than 2.5% of your account value. So you have to structure your trade, right? Okay, let's say 100 points to the downside. You can buy maybe 2 shares, right? Right? If you're buying 10 shares and you're going to be down $1,000 on $10,000 portfolio, I wouldn't buy it, right? But 2 shares, okay, you can buy 2 shares now, and then, if NVIDIA misses earnings, you'll buy 2 more. And if they hit a home run and they're up another 30%, 100 points up, okay, so you made your $250. There any questions? Oh, look at Schlumberger. Hey, what's my exit? I'm actually getting close to exit. Another 2%. Okay, fine. So I'm actually getting close to $60.10 to exit position. It's all about crude oil, and we have CPI data tomorrow. So crude oil is a lot of overhead resistance. So it is a year-to-date high. So it makes sense to trim your position, right? Because tomorrow, I mean, it's either going to continue this breakout or roll over. All right, it's 9:20. Thank you very much. Have a great day. I'll see you at the closing bell. Thank you.